Hello, welcome to Information Technology Auditing. I am Maam Drea. I will be discussing Chapter 6 of Computerized Audit or EDP Audit. I hope you guys are doing well, staying indoors, and keeping the faith. Before we started, let's have a quick review of our classroom topic before. We are now converted into a blended mode of learning. This is a challenge, and I know you guys can do it. A manual system of accounting records. We discussed about accounting record being used in transaction cycles like our expenditures cycle, revenue cycle, and conversion cycle. We go over the manual system source documents, our traditional records like the journals, documents, and ledgers. For the uh, for the documents, we have here the source documents, product documents, and turnaround documents. We, later on, we are going to examine more and compare it to the magnetic counterparts in the computerized based systems. The documents is actually provides the evidence of the economic event that is used to create or initiate a transaction processing. In these sections, we all illustrated the source documents as used to capture and formalize transaction data needed for transaction processing. Most of it is result or is the beginning of the transactions. So, for example, we have an economic event like a sale, which causes my assistant or the sales clerk to prepare lots of sales order. This one is the one that have in the form or documents that prove that there is really sale occurred or physical evidence. So mostly this is copied into and entered in our sales system, such as our billing, our shipping, and the AR. This one, the source document, like sales order, triggers the specific activities in each of these departments. Product documents, on the other hand, is the result of the transaction processing. Common example for this is the payroll check that is made to an employee. This is a product document of the payroll system. um, Later on in our illustrations, we have the customer bill as the product document of sales system. Turnaround documents, on the other hand, is the product documents of one system that becomes a source document to another system. As illustrated, um, the customer usually received a statement of account or a perforated two-part bill or statement, and one portion is the actual bill and the other portion is an advice wherein we have to clear or remove the remittance advice and return it to the company along with our check. So here is the illustration for our source documents. There is an order, and then the sales clerk will stamp the document, the quotation, and then create a data collection in which it has the name of the customers, the address, the billing, the shipping, and then create copies for the sales document before it is entered in our sales system. The product documents goes up to the invoicing or billing of the customer. The product document is the statement of account that includes the remittance advice sent to the customer. The turnaround documents happen when the customer's orders ask for quotation, we collect the data, sales order was created as a source documents, entered in our system, and then create the bill with the perforated form or other half of remittance advice sent to the customer approve the billing, create payment is usually in the form of the checks. It contains the customer accounts, the bank accounts, and it is later on attached with the remittance advice with the total amount and equivalent of the invoice he or she is paying. It is sent back to us and matched to the customer payments to our correct customer accounts, which we entered in our cash receipts system and processed it. Another source of another accounting records is what? The journals and the ledgers. This is one of the book of accounts required by the Bureau for us to maintain in the taxing agent. So the journals is the record of chronological entry. At some point in the transaction process, when there is a relevant happening, like a diary, we record the event in a chronological, dated in chronological order. The documents are the primary source of data for the journals. In in mostly like a sales order being recorded in our journal or captured in our journal. So each transaction required a separate journal reflecting the account affected and the amount to be debited and credited. The journal mostly provides the means for posting to accounts. Two primary types of journal is the special journals and the general journals. Special journals is mostly specific and in high frequency or bulk transactions, and such transaction can be grouped together and for more efficient. As you can see, the sales journal provides a specialized format for recording the only the sales transactions. Sometimes it is done or processed monthly, weekly, daily because of the frequency of the transactions. So I asked my assistant to like post the amounts in columns to the ledger accounts indicated. For example, the total sales will be posted to the account number 401. If you are going to see your PLDT accounts or your phone bill, you have an assigned account number. So most organizations use this several other special journals, not only sales journals. They can use as cash receipts journal, cash disbursement journal for the one that retail. We have the purchase journal and then the payroll journal. Another term used is the term register, which is often used for special journals. For example, payroll journal is now called payroll register. We use register to log or another term for that is to log the vendors and all the raw materials for the shipping register will log for the shipments to customers. So general journal for on our accounting 101, this is usually the non-recurring or infrequent and dissimilar transactions. What are those? For example, the periodic depreciations and the closing entries in the general journal are the adjusting entries. So this is also recorded chronologically and for as practical matter, sometimes we use a journal voucher system. The journal voucher is actually a special source document that contains one single journal entry specifying the ledger accounts that are affected, one debits and one credits. So yeah, these records summarize all the routine transactions, non-routine transaction, adjusting entries, and closing entries. So another accounting record is the ledger. Ledger is the book of financial accounts. This is one of the famous in every accounting movies where this is the one that is stolen from us accountant. Accountants are killed for the ledger, mostly because, as you can see, ledger is the one that reflects the financial activities or posted from the various journals. Whereas the journal have debits and credits and other chronological order, ledgers shows the increase and decrease and the current balance of each transactions. Mostly this is the one that supports our financial statements, daily operations, and other internal reports. There are two types of ledgers, the general ledgers, which contain the firm's account information in the form of control accounts, and the subsidiary ledgers, which contains the more detailed individual accounts that constitute the control accounts. So the general ledger department updates the records from the journal vouchers that is prepared from the special journals. Sometimes it is presented from the beginning balance, the changes, and the endings balance. We know some of the controlled account, like the accounts payable, AR, and the inventory. So audit trail is very important. What is audit trail? Usually the accounting records describes previously provide an audit trail for tracing some transactions from the source documents to the financial statements. Of the many purposes of the audit trail, this is used for us accountants. Mostly, this evaluates if the financial data are fair, are correct, valid, and accurate. Because this is the one that the stockholders and the management used for this decision makings, right? So it is our responsibility to determine if it is complete, accurate, and valid. Okay. So most of the time, if we want to um, examine, for example, the accounts receivable balance in the balance sheet, we go over to examine the ledger, the AR account, control account in our general ledger. Then we can select the number of accounts, or we can reconcile it from the AR subsidiary ledger. And this trace back to our posted sales journal. So the auditor will have to do sampling technique, and then the auditor can identify also the physical source documents that is initiated when every time we pull some information from the file. So another common procedure is the confirmation. I remember when I was with the client, I need to like scan, send email or mail all confirmation. It says something like, "Hi, you have an outstanding balance with us with this amount, and you have invoices owed to us and not yet paid. Is this correct?" And then, of course, if you were the one receiving the confirmation letter, and then it says you owed me something, of course you will reply, right? So that's actually how it took place. The customer need to agree or disagree with the recorded balance. So information contained in the source documents and subsidiary accounts enables us, the auditor, to identify and locate the customers chosen for confirmation. So thus reconciling the account or the amount um, in our general ledger and reported in the balance sheets. This is the substantive test that performed also by the client's firm for major accounts or big accounts and transactions to create to arrive at an overall opinion about the fair presentations of financial statements. Now let us go over the um, in here. Remember also there are two types of the source documents. It could be on the physical, and then on the financial effect we could use the deposit slip, bank advice, and remittance advice. For here we have the shipping notice, sales order, and then we compare it now to the computer-based accounting records. So the audit trail is less observable in computer-based systems than in manual systems. So as you can see, accounting records in computer-based systems are represented by four magnetic types. What are those? The master file, transaction file, reference file, and the archive file. Master files generally contains account data like the general ledger and subsidiary file, while transaction file is just a temporary file containing all the transactions since the last update. That would contain example the sales order, inventory receipts, the cash receipts. That's the examples for transaction files. A reference files stores the one that is relatively constant informations, or those that are standard or used as standard. For example, in payroll system, we use tax table for the compensation, right? Um, to calculate the withholding tax. Other reference files, we use the price list for preparing the customer invoices or the list of authorized suppliers, employee rosters. In our illustrations, we use the customer credit files to approve the credit sales. So the reference, we also have the here the archive file, which contains past transactions for reference purposes. This is the one that is retained for future reference. Mostly, this is very important. This includes the journals, prior period payroll information, list of former employees, the records that we use for accounts write-off, and prior period ledgers. So the audit trail in the computerized based system is as important as the manual. We begin with capturing the event or what took place. In this example, we have a recorded manually sourced documents. Like, for example, I will knock on your door. I will ask for quotation, like what happened to pen and prints. Ask for quotation for the um, signage, office signage, and T-shirts. Remember? And then my sales clerk or my assistant will have to enter or key it in our digital media, thus creating a transaction file, which is the sales orders, which serve also as our digital source documents. In the input is now on the digital form. So when the transactions are edited or updated, and the transaction file is of sale orders is produced, some of the computers, by the way, do not use physical source documents. Instead, they captured it directly to our digital media. For example, in Amazon or in Lazada, what do you do to purchase documents or to ask for quotation? You message seller or you just click add to cart. The next step is to update the various master file, subsidiary, and then control house. During the update, sometimes we do additional edit on the transactions. We check if it is a valid transaction or there's an error or an incorrect account numbers or there's an insufficient quantities on hand. Remember when we tried to post the sales invoice um, and then uh, we don't have an inventory, what do you call that, inventory balance, so we have to put in adjust the beginning balance for our inventory, remember? So all that also create another error file. Sometimes also if we are applying for or where we are paying it with a card or credit through credit, we need to check if it is valid before we process the sale. We receive what? A message that says that your transaction is declined, you don't have an enough sufficient amount, so that goes to the error file. In here, we record our credit history. We used our credit history or credit file as our reference file. And all else, anything that is not rejected is transferred to our um, or the remaining good records are used to update our master files. Um, Only these transactions are added um, to the archive file that also serve as our sales journal. By copying only the valid transactions to the journal, the original transactions file, like the the sales order, we can erase or scratch in for the next batch of sales order. So mostly this is not needed in our audit audit trail purposes. So like also in paper trail, the digital audit trail allows us to do transaction tracing. Again, we as auditor has the responsibility to evaluate the accuracy of the AR figure or amount in our balance sheet or financial statements. First, we need to compare the balance sheet or the AR accounts listed in our balance sheet to our control accounts or the master file AR control account balance. Then we have to reconcile it to the AR subsidiary account total. From that listed transaction, we select a sample of update entries made to the accounts in the AR subsidiary ledgers and trace this back to the transactions in the sales or journal or archive file. From these journal entries, we're now able to identify some of the particulars in and trace back all the physical source documents we can pull from the files and then verify it. So if necessary, we can also perform confirmations for the balances by contacting the customer in the questions. So this ends our discussion for audit trails and accounting records. Thank you for joining with us. Again, if you need a copy of the video, you can download it on my YouTube link and hashtag Mom Drea, or you can message me. I will send you the link. I will also post it on the created Facebook group, ACCM 455. Thank you for subscribing. Have a great day. Stay safe. Stay indoors. God bless.